Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, I wanted to look at a play very similar to what I've brought with a lot of these free videos, and that's something that just fits the very basic criteria that we like to look for in a squeeze setup. So the squeeze is really the foundation of what I have been working with or used often in my trading for the past several years, and it's a very helpful signal. Mainly what we're looking to here are compressions or points in time where an underlying is trading relatively sideways, and it generates a signal that tells us basically that the stock is compressed to a degree that it can't sit there and trade sideways forever. It's going to have to eventually make its move. So what we're trying to do is accumulate the position when we're sitting here trading sideways during these periods of compression, and then ideally we're in the move when it has the next extension or the next run higher. You can see the previous two squeezes worked very well in relationship to this. So what we're doing is accumulating the position inside these moving averages, giving yourself some leniency. So if it does kind of have a radical day and comes down to test a broad moving average, ideally you can hold through that. But basically saying we've got the exact same signal now. We are working here inside these moving averages, and I think this is a good time to start building a position. Now when you come over and take a look at the options chain, you don't really have a whole lot here in the way of options. So if you were wanting to just trade the shares, I think that's perfectly fine for what we're trying to do with this. You could absolutely come in and sell puts to a degree that you are comfortable holding the shares also, and then look for that squeeze to fire long. One other thing about this chart that I thought would be a decent place to look is anytime you're in this situation you think, okay, if I'm buying it now, where would I sell and take profits? Fibonacci extensions are going to be easiest to understand when you have very clean swing highs and swing lows. So you take your 45.93 against a very clear and distinct swing low, and from these two measurements you can begin to calculate your first target and then the aggressive target after that. So the first one would be 47.28, and then if we can maintain some strength, I would look for those to trade up into 49, and I would look for that to generate somewhere around to a 3 to 4 week swing trade, and maybe sooner if we're lucky, but that's kind of the pattern, and that is something that I will be involved with this week. So I hope that helps. You guys have a great night, and we'll see you at the next free video.